Welcome to the Bitcoin Business Podcast put on by Sovereign. I'm your host, Brandon Karpeles. And today I have with me a legend of Wall Street,
Legend of my own mind. You-
legend. Well,
yeah.
no, you are a legend of Wall Street. That's
Mhm.
true. From SkyBridge Capital, Anthony Scaramucci. And Anthony, I really appreciate you coming on here and giving your time. And I'm actually a big fan of Adam Carolla, and I've been listening to him since Loveline, since his podcast days. And I heard you go on there, and he brought up the little book of Bitcoin for about 3 seconds, and then you guys proceeded to talk about stuff for 45 minutes. I was really excited that Adam might actually get a chance to get orange pilled, but alas, I will make sure we talk about the little book of Bitcoin on this
He's not
podcast.
quite there yet. As I point out to Corolla, he has an old mind. Okay, he's an old school Italian. You got to be a young school or a new school Italian to get this. But go ahead. I'm sorry.
No, you're exactly right. I mean, he loves real estate, collectibles, cars, things like that. That's very much a way of storing your wealth in sort of the old fiat monetary system that is coming to an end, but probably won't come to an end before his lifetime is over. So it will probably work out well for him and guys like that who have you know plenty of money that they're not going to get burned too badly, anyways. But um, so once again, thanks for coming on. Wanted to get into the book a little bit. I did go through and read all of it and appreciated you putting that. Well, first of all, actually, is that the first book? That's the second book you did, right?
I've done a few fun books on Wall Street and just things that have happened in my career, but I've done two trade books. One is on Solana, and one is on Bitcoin. And so, if you know the John Wiley publisher, they have a 45 book little book series. So they have the little book of hedge funds, which I also wrote for them. But they have the little book of common stocks, the little book of how to beat the market. There's a whole group of these things, and so they've honored me by allowing me to write two of those books. And I think the little book of Bitcoin was designed for the non-Bitcoiner, frankly, and it was basically my story of getting into Bitcoin, Brandon, and this is the Bitcoin business podcast. But let me tell you what I was not. I was not a Bitcoiner, and I was a Bitcoin skeptic, and I was a traditional institutionalist. And when I got introduced to Bitcoin, as I point out in the book, I thought, bruh, there's a tweet for everything. As you know, I think my tweet was, I don't understand Bitcoin and I don't care. Caveat emptor. Now let the buyer beware. And that was my ignorance. And so it took me 7 years to get up to speed on Bitcoin and then to finally get comfortable with making my first Bitcoin purchase. And now, obviously, I have a lot of my net worth in Bitcoin.
Oh, listen, I mean, we all have a similar story. I was in the banking industry for almost 2 decades, and so you can imagine being in sort of the heart of the monetary system, certainly the lifeblood of the fiat monetary system, and then having to assess from inside that system and look at it
Mhm.
and go, there could be a different way. And one of the quotes you had in your book at the beginning, and yeah, I did notice that at the beginning there looked like there was about 40 to 50 different of these little books. So pretty cool that we have one on Bitcoin now. But you had the quote of making the mistake of closing your mind. And
Yes.
you're a seasoned Wall Street guy, and I think you know say what you want about Wall Street and the people there. I think that is a common refrain amongst people on Wall Street. I think the great investors have that outlook. They approach things from that sort of point of view. Why, in your opinion, do you think there is such pushback? And you do have a quote later on in the book about why you think that might be, but I am curious as to your maybe a little more pontificating and expansion on the idea of why it is so hard for Wall Street, who does operate with this mantra of don't close your minds to things. Why are they closing their minds to this thing? Now less and less, of
Oh,
course, but
less and less. I mean, more
yes.
as we
Yeah.
are speaking this week, Morgan Stanley just announced that they're going to have a Bitcoin ETF for their customers, a Solana ETF. They're moving in that direction. The whole bell curve of regulations shifted last year with the introduction of the Trump administration and pro crypto friendly regulators at the CFTC and also at the SEC. But here's what I would say. Stepping back, Wall Street really does not like change. Wall Street does like a bureaucracy, believe it or not. If you said to me, what is Wall Street like? They like ambivalent, mixed government. They like grinding, slow government where not a lot of things happen. They like heavy predictability and status quo. And then therefore
Lack of
they
volatility.
exactly. And therefore we can analyze the securities and analyze the businesses. And of course, they like a Fed friendly environment where they like rates lower versus rates higher because rates are the financial gravity of financial assets. And so for me, I was that. I want to put my hand up and tell you I was a Wall Street
Me
institutionalist
too.
and a Wall
So
Street traditionalist. So what makes this hard is wait a minute, the fiat system could change, or this could be a part of the fabric of a future system. Well, I don't like that. I've made my money this way. Warren Buffett, Bitcoin is rat poison. Uh, it could be also that if I'm a bank and you're telling me I can control the flow of money, right? If you really think about the banks, they're sort of the arterial structure of the flow of money. And now you're telling me through technology, I could create this very more efficient, this neater protocol, this cleaner way of doing things that will make the transactions move more quickly, make the transactions more secure. And from a profit perspective, because it's minuscule in terms of the fees that would be charged to do these transactions, you're going to cut into my profit margins. Imagine, Brandon, a long distance phone company when I was growing up in the 1980s being told, well, 40 years from now, you're going to hook into Wi Fi and make a costless long distance phone call. They'd be like, well, we don't want that. Why would we want that? So we have a tendency to slow down technology. Jerry Yang, you may or may not remember him. He was the founder of Yahoo. He went on to become a billionaire. He
sure.
was a student at Stanford University. He invented the search engine. He went to Pacific Bell, and Pacific Bell was one of the original breakups of AT&T for that region of the country. He got a meeting with two executives there, and he said, listen, let me take out my laptop and we can look up phone numbers with this device. I'm calling it Yahoo because I'm a young kid. It sounds like a cool name. And they looked at him and said, so wait a minute. Yeah, why would we want that? We cut down 4 million trees. We send 3-pound yellow dyed phone books to our customers. We've been doing that for 95 years, Jerry. Why would we want this? We don't want this. This is how we sell advertising. This is how we get our customers engaged. Could you please leave? He was offering to sell that to them for like $1 million. He thought it was a cute search gadget. So he left there. He built Yahoo, and you know the story. So we do this. We don't just do this in finance. We do this in every level. Henry Ford had a great line about cars. If I asked my customers what they wanted, they would have said faster horses, not cars, right? Not the horseless carriage, right? Steve Jobs, I'm going to develop the product. My customers don't realize what they need or want until I create it for them. And so you got to have that mindset. But this is a technology that is transformative, and Bitcoin is a transformative, I think, a value storage mechanism as well. Okay. And now maybe it started out as money, if you read the Bitcoin paper, and maybe the world wasn't necessarily ready for the money, and maybe it could become money over time, but it's definitely a digital store of value. It has a scarcity component to it, which is mathematical. It's not geological. It has a adoption component to it. It could have not worked, Brandon. We could have had Bitcoin trading at a few pennies, It could have not worked, but what ended up happening is people looked around and said, okay, wait a minute. They've corrupted our money. They're drunk driving with our money. Every central banker in the West, the central banking of Japan, central banking of Western Europe, and the U.S. central banking, the bankers and their committees are all guilty of drunk driving with our currency. Okay, it's reckless. Okay,
Like
and
drunk, high, and half asleep, I would say.
yeah, so they're drunk and half asleep, and they've literally destroyed our currency. Our politicians allowed them to do it because the politicians, they don't like taxing people, so they've defaulted into the most pernicious and the most regressive form of taxation, which is inflation. And so they took our US dollar from 1971, which was represented by 1 ounce of gold equals 35 US dollars. And now we turn that into 1 ounce of gold equals 4,200 plus US
I think it's
dollars.
4,500
40
this morning, but
4,500 this
yeah,
morning, right?
it's
So
crazy. Yeah, yeah.
and it's crazy, but it's not crazy. And by the way, to make a very compelling argument for Bitcoin and about it as a value storage mechanism, I want to talk about my parents' house for a second. Okay, my parents bought their home in May of 1962. They paid $16,000 for their home, or $450, 450 ounces of gold. It's gold price at those levels. The house is now worth on Zillow $780,000. My parents still live there. Okay. Uh, and but priced in gold, Brandon, it's 257 ounces of gold. So the house has actually gone down in value, which makes sense. It's an older
Yeah,
house.
of
It doesn't
course.
have the right technology in it, all these other things. But my
It
parents think they have a windfall, but they don't have a windfall because the purchasing power of the money has been completely and totally destroyed. And I don't know how to make a more compelling case for Bitcoin than that example, which is combined with the malfeasance of our governmental officials and our policymakers.
Well, and that makes sense, right? Housing is a consumption good. It's not a store of value. It's turned into one because people are monetizing anything that's scarcer than the dollar. Because even, as you said, even losing 50% uh, purchasing power in gold, imagine if they had not had that house and kept those $16,000 in dollars. I mean, it would be worthless. So it's like you're just taking a little less pain to do that. But I do want to get what you're talking about is in the white paper. It was a peer-to-peer electronic cash, and actually, I'm actually after this call, I'm going to do an interview, and the point of the discussion is the increased merchant adoption. And as Square has rolled out, or Block, the Square is a subsidiary of Block, and as they've rolled out this option to begin accepting payments in Bitcoin, we're actually, I saw the numbers, I think it was a 53% increase in the number of merchants nationwide in the United States. I'm not sure what the global numbers are, accepting Bitcoin payments. And so in my opinion, there's been some back and forth as to money. Money has to be a medium of exchange first, and then it becomes a store of value. Other people say no, it has to become a store of value, and then ultimately becomes a medium of exchange as people demand the thing that stores their value better. But I think we're actually entering the phase of Bitcoin truly becoming a medium of exchange. I just yesterday I bought some clarified butter from a guy named Great Gee. I paid in Bitcoin, and I bought some freeze dried fruit from a guy Sats for Snacks, and it's my kid's going to have that for his snacks. And so that marketplace where, and I'm seeing that personally as someone who's helping onboard businesses to Bitcoin, we're seeing more and more of the merchant payment adoption as well. And I think they're going to go hand in hand. But curious, I agree. It's obviously solidified itself as a store of value. There's no doubt about that.
Yeah,
But
and more. I mean, so your point. Listen, I dream about Michael Saylor's being right. and I want him to be right. I'm probably more cautious than Michael, which is why I'm probably not as rich as Michael. I see it at worst a store of value. And I see it at best a store of value and a universal currency instrument that eventually replaces fiat currency. One of the things I said in my book, and some people got upset with it and some people criticized me for it, is that every fiat currency in history has eventually failed, Brent. Okay, so by the way, that is a factual statement. Okay, and people don't like to hear it. Michael Milken once said every sovereign debt has also failed. Every sovereign debt, they've said no más, done, Roman Empire, etc. And then he got very roundly criticized by the American government, so he pulled that back. But he's just telling you historically what's actually happened. So this is something where we don't have to trust the government. This is something where we don't have to trust the central banker. This is something that we end up trusting the network. Said differently, we don't like or trust each other, Brandon. Okay, that's why we've always had third parties in the mix of our transactions. And so now we do have a third party, but it's 100 plus, 200 plus thousand network of transaction verification people or nodes on the network supporting the blockchain. And all of a sudden that becomes something that we can trust. And it's a hardened thing. But if you're on Wall Street and you made your money as JP Morgan and you made your money on the fiat rail system and you made your money on admin fees and wire fees and you're a credit card company and you're a transaction verifier, you're a third party verifier, you make 3.5% doing that. You don't want this to work. You don't want this to be a part of your future. Why would you want that?
Oh, of course you don't. And I always find it so fascinating that yes, this is your business model. It's not going to work under a new system. And the natural reaction is to keep the moat up. How do we fight? How do we expend resources? How do we expend labor? How do we expend our time on creating a bigger moat, or lengthening the time to the change comes, as opposed to just adapting and moving with the technology. It's funny you mentioned Pacific Bell earlier. I'm in Chicago. I remember Illinois Bell very, very well. And it was, why didn't you want to adapt? They could have easily been a Verizon, a T-Mobile, that, whatever, pick it. And instead they tried to fight it, fight it, fight it. I think even probably like 8 years ago, I think I was still getting phone books, and I'm just like, you got to be kidding me right now. You can look everything up online. This is so preposterous, and it. I wonder, I kind of wonder what the mentality is there of why you don't innovate and adapt, and why the knee jerk response
Well,
is
I
build
I
up our
I I I
defenses.
I I think it has to do with our reluctance to change. We're biologically wired not to want change. And it's a great irony because the only thing that is constant in our lives is change. The 5-year-old version of me is long gone. And this, next year, the current version of me will also be long gone. And so we have to accept the change. And what I have found, and I'll stipulate this, I'd love to get your reaction, your thoughts on this. But I have found that if you have a better technology, it gets adapted and it gets
Yeah.
adopted. And it just does. Nobody wanted Uber. What are you talking about? I don't. No mayor wanted it. No taxi cab commission wanted it. No lobbyists, the state or local legislators wanted it. But you know who wanted it, Brendan? The people. The people wanted it. And so what happens is when you have something, it ends up getting adopted primarily because it's better. You know, and
And that
I
goes.
and by the way, this is also property. One thing about the Western governments, they don't take, at least for right now. I mean, maybe Mayor Mondani will see it differently, but the property is held sacrosanct in these countries. They don't take the property from you without compensation.
Yeah, exactly. Unless you're the mayor of New York City,
But
but
then, but if you
you
are the mayor of New York City and you want to do that, it makes Bitcoin more valuable because I can put it on a USB and I can get the hell out of there. right?
Right. And maybe I'll sell some of my investment real estate because I don't want to be subject to your property taxes or onerous regulations, whatever, and I'll just diversify into a better asset. But that's a good point you brought up earlier where hey, maybe this thing would have been 2 pennies and it failed, but the reason it didn't is because it has all of the properties of a superior money. And that is the technological adoption that's going on. People are just saying this is better money, this is a better store of value, and more people are realizing that, just like Uber did. And pick your technology. You had shoot, my phone just locked on me here. But you had, to that point, you had a quote in the book where you said, turning your back on the future, particularly esoteric and scary ones, is a recipe for ruin. And that's exactly what we're talking about right here. And
100%.
and you brought up the idea of, yes, biologically we are, we want status quo. We want things to stay the same. Change is hard, and especially nowadays where things are moving so quickly. It was, you could go centuries before someone had a, not centuries, but maybe like decades before someone had a military improvement. The example Safedine uses is gunpowder. Just, well, you cannot adopt gunpowder, but you're going to lose every war you fight in. So, um, you know, make your choice. So as it comes to this, we just see this time and time again throughout history, is that if you don't adopt this technology, you will lose. Like you are flat out going to lose. And I guess I find it just fascinating that human psychology is at such odds with that, yet everyone knows it to be true. Like if I said that quote to someone, 100% or 99% of people would agree with me. They'd be like, "Oh, that's insightful. That's good thought," and I agree with that. But then when it comes to, "Hey, will you make this change?" It's like, "No, I don't want to do that. I have no interest in doing that."
I think one of our big issues as human beings is we will take the easy way out in politics, and that is an axiomatic fact for 5,000 years of historical observation. And so, the easy way out is to inflate. The easy way out is to overpromise and to create things that are not sustainable. That's the easy way out because Keynes said it better than you and me, Brandon. In the long run, we're all dead. And ultimately, that's what we do. And this is a opportunity now to create a system that can live beyond us, that's hardened and doesn't steal the money from the poor and the middle class and the lower middle income people. Because, my dad was a worker. He worked with a crane, got paid by the hour. The money came in, it was his time and his energy equaled money. Now, if you're going to take 10% of it away from him with inflation, you just sold 10% of his life. If you're me or you, we own assets. We can sort of hedge ourselves against that nonsense. Our price of our house goes up, a price of our Bitcoin goes up, a price of a stock goes up. But what if you're a lower middle income person and you don't own any assets? Then what happens?
You're the bag holder.
All right, you're the
I mean,
bag
it's as
holder,
simple as that.
that's what's going on. And by the way, that's where the populism creeps in because these people get very upset. They're like, okay, I'm going to go to hard left populism with Mondani. I'm going to go to right leaning populism with Trump, and the people in the middle. They've left these people out. They haven't provided the advocacy or the right policies for these people, and that's where we are. That's the society that we're in, and this provides a solution for that.
I couldn't agree more. I had this conversation on this podcast with Marty Bent, and we were talking about exactly what you said. There's this far right populism and this far left populism, and
Mhm.
people don't realize that the root of the issue is the monetary system. You guys are angry about the symptoms, and then you have different solutions. You have different solutions for each of the symptoms. You want to treat, you want to cut the branches off as opposed to uprooting the tree. And you guys are disagreeing over the best way to chop the branches off, which branches to chop off. And it's like the whole tree is rotted. The tree is dead. It needs to be lifted out. Your dad needs to get in there with the crane and pull the thing out, and send it to the lumber mill, or
No,
not
I
the
don't.
lumber mill,
I and I want to emphasize this, that like when I made my first Bitcoin investment, I believed in it. I had passion. I had done the homework, but I was worried about it because I got so ridiculously criticized and I got so ridiculously ridiculed. And I think one of the smartest people in finance, I mean, I'll stipulate this, you may or may not agree, is Jamie Dimon. Had an unbelievably successful career. He's run one of the more successful banks. He navigated that bank through the financial crisis quite well. He called it a pet rock, a decentralized Ponzi scheme. He called it all kinds of stuff. And I'm like, okay, I'm not smarter than him. I've been humbled by life and I've been humbled by markets to know that I'm not the smartest person in the markets. And so what I would say to people, and I wrote this in the book, I think you have more risk not owning Bitcoin than you do owning the Bitcoin. And again, whether it's a 1, 3, 5% position, 10% position, I think you're going to better serve yourself and your family to get off of zero. And lo and behold, it's 10 years later. And, you know, these guys go from negative conviction, Brandon, to resentment. You understand the
Yeah,
transition?
yeah, oh yeah.
Because, like, if the thing went from 1,000 to 91,000, makes them look bad. So now they resent it as opposed to, championing it.
Yeah, and of course they're like, "Well, it can't go any higher from here." It's like, well, the people at $910 were saying that. The people at $9,100 were saying that, and we'll be saying this at $910,000 too. So,
100%.
uh, uh, there is an unfortunate resentment, and then almost digging your heels in, where you'd rather go down with the ship than admit you were wrong, which is another messed up part of human psychology. But to what you were saying earlier, I, I I'm not so sure you're not as smart as I think Jamie Dimon has been the benefactor of a very generous connection with the system and the money printer. And I don't think without the bailouts things would have worked out so well for him. And I think you've been in a position where you've actually had to invest correctly, and don't have bailouts coming. And I think it's part of the fiat monetary system. It's part of the unfair system that's been erected around us. And so some people may look smarter, and that's another thing too that's so pernicious about this system, is that it's difficult to discern who actually earned where they're at, and then who was just closer to the money printer, who was able to take advantage of cheap debt and leverage that, and take advantage of a system that, if you know how to play the system, you can unfairly get ahead of it. And it's almost, not to get too into the culture wars here, but it's like kind of like DEI stuff, where you see someone and it's like, well, that person looks different than me, so were they put in this position because they earned it? And it's like, it's always in the back of your head of, "Oh, is this person really qualified, or did they just fit some sort of category?" And the monetary system does the same thing. Like, well, did that guy actually deserve that Rolls Royce, or did he just cozy up to, you know, someone near the money printer, and was just a benefactor of a system that he's entrenched himself in, or herself?
Some, I think I'm old enough now to know that some of it is smart, some of it is luck, some of it is timing, some of it's what you said about entrenchment and being close to the nexus of power. It's easier to make money in a large institution like that than it is as an entrepreneur. We both know that. Although if an entrepreneur, you have more control over your own destiny, and you can obviously create Elon Musk levels of wealth if you're in that area. I think for me, I left Goldman Sachs. It was my first job out of law school. I left Goldman Sachs 7 years after I started there. Nice career there, but it's been 30 years since my departure. And I think for me, it's given me a lot of intellectual freedom, because I think what happens is when you're in those big places, You've got to cut the
100%.
sharp points off of your elbows, and you've got to conform into a certain style box. You certainly couldn't be as opinionated as I am or have as big of a mouth as I have, Brandon. When you said I was a legend or some shit like that, I don't know what the hell you actually said, but I'm like, I'm a legendary outsider, is what I actually am. I'm not really a legend on Wall Street because I was only on Wall Street for 7 years. I'm a Wall Streeter, I guess, but I've been an outsider, and a result of which it creates some iconoclasm or iconoclast behavior, which is the reason why I admire you. I think those are the people that help us get places. I feel when SkyBridge made the decision 6 years ago now to go into Bitcoin, it opened the door up for others who were on the fence to say, well, wait a minute, maybe I got to take a look at it. Ray Dalio did that for me. Michael Saylor did that for me. Paul Tudor Jones did that for me. Michael Novogratz did that for me. And so,
Yeah.
you know, I mean,
And
I'm
being
hoping
a
you and I will do that for somebody listening. I hope somebody will listen to this. And if you are listening, please pay attention. Get off zero. And if you get off zero, just a sliver off zero, learn more about it. And my bet is you'll go down the rabbit hole that Brandon and I have gone down, and you'll own more Bitcoin than you'll be amazed at how much Bitcoin you own over time, because Bitcoin will be likely your best performing asset over a 5 year period of time.
No doubt about that. And listen, it's hard being a pioneer. I'm I'm sure you could have just sat at Goldman Sachs, had a nice career. I mean, that's what I was doing. It was 19 years of me sitting in a company, and yes, I did a good job. Yes, I was a valued employee, blah blah blah, all that stuff. But I got to a point where I said, I gotta go out and tell other people about Bitcoin. I have to start being a part of this frontier, being a part of the pioneering, and as you said, individuals getting to other individuals and making them feel comfortable with things, moving things forward. And I mean, that really is the entrepreneurial spirit at the end of the day. And the irony is, I actually got one of my majors was in business entrepreneurship, and then I sat in a corporate position for 19 years, and it got to a point where we have to go out and do something. We have to create for ourselves, and there's reward in that. There's value in that, and there's a lot to be said about actually taking agency of your life and having autonomy over what you're doing. And yeah, and being able to have those sharp elbows. I had people thought I was nuts even when I was in the corporate world for the stuff I would say and do, and that was probably tamped down about 70% from what I really felt.
Oh, it's you bring that up because that slows down progress. And by the way, some of it's good because maybe there's some things that happen that get saved by the bureaucracy, meaning a bad idea, you know. But I think some of the good ideas, it takes longer for them to germinate as a result of what you're saying.
I couldn't agree more. And so along that front, you had a part in the book where you were talking about Kevin O'Leary, Mr. Wonderful,
Hmm.
and his sort of views on Bitcoin and how they changed over time. And he was really concerned about sort of the regulatory aspect of it. And me, as more of I came to Bitcoin more of from a libertarian, anarcho-capitalist standpoint. And so for me, it was always like, well, I want to use this money because it's better money, and actually the government can't tell me what to do. And okay, maybe as a trade, it will get hurt in the short term if it doesn't get regulatory approval, or it might take longer to have adoption. But over time, with a long enough time horizon, with a low enough time preference, I know what Bitcoin's going to do because it has the best properties of money. And I'm curious as to, and obviously we've gotten all this. The ETFs have been approved. There's companies putting it on their balance sheet. All this different stuff that's happening right now. Clearly, we have a friendly administration. This administration could be out and a new one could be in, and things could turn hostile. How what's your view of sort of the institutional, I don't want to say Wall Street crowd because that's not it's not really what I'm talking about, but sort of people like Kevin O'Leary, bigger investors, family offices, private equity companies that are looking at Bitcoin. Does if there is some sort of reversal in, the regulatory landscape or whatever you want to call it, does that shake them out of their position, or do you think these people like truly understand the value of a better money?
It is such a good question. Okay, so I obviously don't know the answer to the question, and so
It's an opinion, yeah, for
I'm gonna
sure.
give you my
Yeah, yeah,
aspiration. I'm gonna give you my
yeah.
aspirational answer. Okay, what I'm gonna say to you is that there's a generational thing happening right now, and there's a great book on this called The Fourth Turning, and basically what ends up happening is every 80 years, which is approximately 4 generations, there's a turnover. And so we look back and we say, well, why is that institution in place? We're young, let's change the institution. The post World War II order of things is 80 years old. And guess what? You now have politicians saying, well, why do we have this? Why do we have the World Bank? Why do we have the UN? Why do we have these rules? Why can't I just take Greenland or Venezuela or whatever it is that they're thinking about? And this does
Well, we're
happen.
doing that, so
Right. So
yeah,
this does happen.
yeah.
We have this change in the system. So my aspirational answer is we come to grips. There's something going on in Iran right now. And if you've been watching the news, there's protests going on in Iran. Could those protests topple the government? I don't know. But if you ask the people, if you poll the people, if you get a chance to poll the people, it's a closed society, they're negative on their government. And so we know that there are things that are axiomatic. If you're in a repressed uh, narco state, or if you're in a repressed religious fascist state, chances are you're probably unhappy as a citizen. Okay. And I will tell you that as a person that lives in a fiat currency based world that has anywhere from 5 to 7% inflation, forget the CPI number because that's a joke. Just look at if you take out food and energy prices, there are lies, there are damn lies, and then there are statistics, Brandon, right? So
And
you,
there's government
yeah,
statistics.
exactly. So the inflation's not 2.5 to 3%, and
Of
I
course not.
I know that as well. So
Yeah.
my aspirational answer is that it does cede to that default that you're describing. That we accept that we don't do this well, and so therefore we have to set up a protocol or an unbreakable system to do it for us, which keeps us honest.
I I, I tend to agree. I think that, as I said, I think it would might elongate the timeline or something like that. But at the end of the day, the better money is going to win, and people are going to want to use it because it's better money. I mean, listen, gold demonetized silver for a reason, and
Yep.
it's going to be no different with something like this. And sure, yeah, okay, you had China, right? Or China and India both said they want to go on a silver standard. Great. Well, you had like two of the largest population centers of the world choosing this inferior money. And so maybe it took gold, an extra 50 years or a century to monetize, but eventually it did. And those countries basically went broke. I mean, they were bankrupt nations who probably set themselves back 500 years, something like that, by choosing an inferior money. And so, unfortunately, we do, and those were giant. That's just a derivative of regulation, right? Like we've declared silver money in our nation, and not gold, and that would be the equivalent of some sort of regulatory crackdown on the better money. But it will migrate across borders, and especially now in the digital world. You brought up the fourth turning, the Sovereign Individual is a book I loved, and a lot of the fourth turning themes are in that book. And that's the idea, is that once you have capital able to move, and you talk about gold demonetizing silver, that was with physical, heavy metals needing to be moved around. Imagine if the money can just move over the internet. It will certainly hasten that
Yeah.
change.
Our friend Lynn Alden says all of that. And she says, listen, we moved the money by stagecoach, right? We had the Morse code. We were moving communications at the speed of light. But the money was moving by stagecoach. This is the first time in our history where the money can move as quickly as the communications. And we have
Yeah,
to be able,
because the network is the currency and the currency is the network, and
exactly.
that's
We have to take
and I
advantage
think
of that.
yeah, and I think that is mind blowing. I mean, that's to me it's mind blowing, and I think there's some people haven't really wrapped their heads around how mind blowing that is.
Well, I appreciate being on, sir. This has been a great fun for me. Hopefully, we'll see each
Yeah,
other soon.
absolutely. I appreciate your time today. I got one last question
Sure.
for you. So, as all of us have gone through our Bitcoin journey, we certainly have different views and changing views. And so, has your view on crypto, quote unquote, changed at all? Is it do you still feel that there's value there, or just being open and honest. As you say in your book, I'm a Bitcoin maxi. I have an inordinate amount of my net worth in Bitcoin and believe in it to be the future. But I'm just curious, do you still think some of this other stuff has any value, or have you moved more towards, Bitcoin is the only thing of real value here?
Well, again, I am that everything you just said, but I do think something like Solana may be used to tokenize stocks and bonds. There are other assets other than Bitcoin, and I think we're going to see this stuff tokenized. And I do think these layer one protocols, particularly Solana, is fast and cheap, and it has transaction volumes now exceeding Visa. I think it could be that rail system. And so, since we're talking about old Wall Street on this program, guys like Larry Fink and Jamie Dimon are saying that we're going to tokenize real world assets. So, where are we going to do that? I don't think we're going to do that on Bitcoin unless you're telling me the
Oh,
Lightning.
definitely not.
Yeah. So,
No,
I don't see it on Bitcoin. Could it be on Solana? I do think that. And so, I own some of that because I think that's almost like an operating code, an operating system that we could end up using. Do I
well,
think the
it's a highly centralized database, right? Which is really what you need um, to make these real world assets. I'm personally of the opinion you don't need a blockchain to do that, because if you have something like Solana where it's so highly centralized, what's the difference between the one server running the Solana blockchain versus the one server running an Excel spreadsheet? But I do agree that we are going to go digital with deeds and titles and all these sorts of things, mortgages, all this sorts of stuff. I'm just personally of the opinion you don't need a blockchain to do that. You just need a big database. So,
okay,
but
and that
yeah,
that may be where it goes. If you said to me there are 20,000 tokens, will 19,750 of them go to zero? Or they'll go pretty close to zero. That's my opinion. Will there be 100 or so tokens that have a cult following? I don't know. Something like XRP or Cardano, I think, will be with us forever just because of the cult nature around those networks. But
almost
again,
like a collectible at
like a
that point,
collectible,
kind
yeah,
of.
yeah. So
Yeah,
I
it's
mean,
just
I
that.
don't
Yeah.
think it's going anywhere any more than a Mickey Mantle card. I'll stipulate that a Mickey Mantle card is three color processed ink on cardboard from the 1950s. That's what it is.
Yep.
It's trading for $10 million today, and I'll make a bet with you 10 years from now it'll be $15 million. So there are certain
Sure.
things, the Mona Lisa, if they took it out of the Louvre, it's on a walnut sheet and it's got acrylic paint on it that could sell for $2 billion. I don't know. My point is, you and I both know the capricious nature of human beings, and we know because of our impermanence, we're trying to buy something that we perceive as exclusive and permanent, and it drives our behavior. So we do know this. So I'm going to stipulate to you that there's a group of securities that I think are worthless. There'll be other people that think they're worth money. You may be right that we go away from things like Solana into just a uncorruptible spreadsheet. That may happen. But knowing what I know about Wall Street and the economic incentives around these things, I think they're going to get driven into something like a Solana. Now, I could be wrong on that. Like I said to you, I started the program by telling you I've been humbled by life and I've been humbled by markets. And so I'm not sitting here saying anything declaratively. I'm saying this is my research, this is my observation of human behavior, this is my belief in what I think is going to happen. And it may or may not happen. But if you said to me, what's my certainty levels? My certainty levels are in Bitcoin are pretty high. They weren't high. They were 55, 60% when I bought my first one. They're probably 90 to 95% today. But I'm never going to look you in the face, Brandon, or anybody and say I'm 100% certain, because that's when the lightning hits you in the head and you get knocked to the floor.
That's when that is the one thing I do have to, people say you can't be 100% certain about anything, and I just have to say you're right. I mean that is true.
I expect to die.
Other than I'm going to die. Yeah.
Oh yeah,
I guess even then, I guess the rapture could happen. Christ could come back, and
you may get the
even that's not 100%.
Talking about this poly pill that you can take to rejuvenate your cells. I don't know what the hell's going to happen. Who the hell knows?
Or if there was a great cartoon show, not a cartoon, I mean, it was a show, it was animated, called Pantheon, and basically everyone lived forever on a server. And these servers were in Norway, and everyone's, their digital version of themselves lived, and they all interacted. So are you still alive at that point? Or, is your soul gone? But anyways, I know you have to run here, and you've been very generous.
It's been a great
time,
conversation. So. I want to stay in touch, my brother. Thank you so much.
Yeah, same here. I really appreciate you coming on. Thank you so much. And for people that are newer, that may have some questions about Bitcoin, the Little Book of Bitcoin is a good starter book, and maybe give it a read. It's a quick read, and you'll learn a lot. So, Anthony, thank you so much for joining. As always, podcast put on by Sovereign, SOVREIGN, sovereign.io. I'm Plebe Anon on Noster, and you can find us on LinkedIn, X, under the name Sovereign. So thank you so much, Anthony. Before I go, anywhere you want to send people for you?
I'm at Scaramucci on Instagram. I'm /Scaramucci on YouTube, and I'm at Scaramucci on X. That's where you find me.
Awesome. Well, check out Anthony, and thank you for your time, sir.
All right. God bless.
God bless.